Hey, good afternoon. Bob from Trade Genius again. It's the 11th of May, and I'm continuing in my series here, talking about the different countries and how I think they're going to be impacted by the coming, collapse in China. And Australia comes to mind, and I think they're the beginning of some deep weeds. And I'm going to start off here with this is the Chinese. Official purchasing managing index, and even official data, they can't even get it over 50, which says that they're purchasing less and less and they're contracting. And we know from other reports I've done on China last couple weeks that their imports are just absolutely cratering, and their economy is just really being um, held up through sheer speculation and a credit bubble that is just dwarfs anything we've ever seen. And at some point, they're not going to be able to service that debt, and it'll all come crashing down. And you can see from the next chart here, their imports are starting to fall. And one of the things that they're going to find is that the only way they're trying to keep the game going is to continue to devalue their currency so they keep their exports up. Well, there's one little problem. They have to import, and the cost of importing goes up, and they're struggling in this area. So I'm just concerned for Australia because they're so incredibly dependent, as you can see in the next charts, on China, and they don't really have a secondary market that they're going to be able to rely on, and I think it's going to cause incredible dislocations in their economy, and soon. And if you look here, Australia, their top 10 exports, they're definitely a resource-oriented economy. Oil, ores, precious metals, meat, grains, chemicals, and then down here you start getting machines, but then you're back to aluminum and copper again. And they had a nice run, and they missed the 2008 collapse, but this credit collapse is going to affect them. And and I think they're not diversified enough, and the world's producing too much of the other stuff anyway, including their trading partner China. And if you look here, is it the top 15 import partners of Australia? China's their number one. Okay, Japan's their number two. And so between these two countries here, they export half half of their exports. And a lot of these countries that they export to turn right around and then export to the United States, and we're going into a recession. And so as another mercantilistic economy, when we go into this next recession slash depression, these countries get hit hard. The U.S. was this way in 1929, and we really suffered from it. And Australia is positioned the same way. If you look here, is their biggest surpluses with China and Japan. And as these economies start to crater and their export markets fall away, they're going to need less things from Australia, and it's going to cause them even more difficulty with their economies. Basically, their export engine will just dry up. And the next area here is these are the companies that are at risk, and the big one here is BHP Billiton. And if we go into the charts here, well, I'll start with the Australian dollar. Is that they already are seeing the effects of a slowing economy because now they're trying to devalue their dollar. Okay, and that only works for so long before it causes a lot of grief. And so right here we got another bear flag. It looks like another rollover is probably coming upon us. So if you're a currency trader, I'd be looking to short the FXA or buy some puts on it. And their biggest exporter, BHP Billiton, and this stock is forming a nice little lower high here, and it's already momentum up, no intensity whatsoever, and now just simply waiting for for it to roll over, and this is probably going to go from 32 to 26. You're looking at probably $20 in BHP in not too long a period of time. And then the last one is just an Australia index, the IAF. Now this one's holding up pretty well, but we're starting to get some topping wicks here, and I'm not sure how you could really play this on the short side, but it just gives you an indication here that they kind of double topped it here, and I think this thing is ready to roll over too, but still pretty strong. You really can't trade it. Well, I thought I'd share that with everybody here is that you know anybody that's really dependent upon the Chinese export engine is gonna really start to see some severe dislocations in their market, and Australia is already heavily dependent on China and Japan, so it would be interesting to see where it goes, but it doesn't look good to me. So anyway, guys, have a great day. Bye.